Has Tampa Bay's housing market finally bottomed out? The quick answer is Tampa Bay home prices have mostly stabilized after last year's drop, but with inventory still high, sellers becoming more motivated, buyers still hold the upper hand in late 2025. So if you've been waiting for prices to, quote, bottom out before buying in Tampa Bay, this fall might be your opportunity. After more than a year of cooling, the market has finally found its footing. Prices aren't free falling anymore, but they're not rising yet either. That means one thing for buyers. You have leverage for the moment. Homes are staying on the market longer, sellers are still offering concessions, and interest rates have leveled off, but they're starting to come down. The result, a short window where you can negotiate strategically before all the competition returns. Just understand this window of opportunity won't last forever. So what are the numbers saying? Prices are leveling after 2 years of wild ups and downs. The Tampa Bay market has finally shifted gears. The median sale price sits right around $410,000, which is down 8.7% year over year. In St. Pete, average values fell about 9.8%, now hovering right around $349,000. But if you go to the other side of the county, and to the east, in Wesley Chapel, prices only dropped about 0.7%, showing more stability in part due to the new construction market and other growth factors out here in Wesley Chapel. But here's the catch. While prices have stopped sliding, properties are taking longer to sell. We all know this. Homes are averaging about 57 days on market, which is up from about 36 days last year, according to the latest report on September from Redfin. Instead, buyers can take advantage, breathe, shop carefully, and negotiate from a point of strength. But I will say that appropriately priced and well-presented homes are moving a little bit faster than the average. So if you do like a property, don't sit around too long. So are we crashing or normalizing? There's been a bunch of talk about this. I'd say it's normalizing. Here's why. After record highs in 2022 and 2023, those small price declines of 24 and early 25 aren't signs of a crash. They're signs of the market actually correcting itself. Analysts do expect, in some reports, stabilization between 1% and 3% through 2025, a healthy pause, which is much needed after double-digit gains. Some neighborhoods in the area are even showing modest 3 to 4% growth thanks to equity-rich buyers who can weather those higher rates. This is another reminder that not all of Tampa Bay moves in sync. Everything has its own market and then micro markets. Where do buyers have the most leverage? If you're looking for the best negotiating power, my suggestion is that you focus on homes that have been listed over 45 days. Those sellers are far more open to credits and potential price adjustments. Mid-tier neighborhoods between $350,000 to $500,000 have been hit hardest by rate sensitivity. So suburban spots like Wesley Chapel, Riverview, etc., have long days on market times, sometimes in the 60 plus range, depending on price point, which signals a lot of room for negotiation. Use that leverage to your advantage by asking for seller paid closing costs as an example, or maybe even a rate buy down rather than chasing a price cut. Those two strategies might yield better results for you over the long haul and save you much, much more money. Why the bottom feels different this time. Past bottoms in housing were followed by dramatic rebounds. This one feels different. It's like more slow, right? Segmented and policy driven. The insurance and flood disclosure changes taking effect in late 2025 are adding complexity to total ownership costs. Smart buyers are taking their time to calculate their full principal, interest, taxes, and insurance before diving in. In short, it's not just about the price tag anymore. It's about the full cost of owning in Florida's changing climate and insurance environment. So what could end the buyer advantage we have right now? If mortgage rates drop below 6, and we are getting close for well-qualified buyers right now, I expect floodgates to start opening. Pent-up buyers waiting on the sidelines will come back into the market, Competition is going to start to spike over time, and today's negotiating power will start to shrink quickly. That's why many real estate pros are calling Q4 of 2025 a strategic window, or the calm before the storm, if you will. What can you do right now? If you're buying this fall, target listings over 45 to 60 days old, as I mentioned before. They're ripe for negotiation. Ask the seller for a rate buy down or credits. Use seller money to lower your interest rates. Get insurance quotes early. That is absolutely critical. Confirm property and flood insurance costs before you make an offer as best as you possibly can. So a quick review. Are Tampa home prices still falling? Prices have mostly stabilized, down about 8 to 9% year over year, and analysts do expect minimal movement through the end of 2025. When will the market turn around? That's the big question. If rates drop below 6%, I totally expect buyer competition to heat up, possibly by spring of 2026. And the big question, should I wait for rates to drop? Well, waiting for rates to drop could cost you leverage. It's often smarter to negotiate seller-paid rate buy downs right now and refinance later if rates fall. This is going to be very dependent on your situation. So the final takeaway, Tampa Bay's housing market has likely found its bottom or really close, but it's a soft landing, not a rebound yet. For buyers, that's excellent news. With motivated sellers, high inventory, and steady rates, you can buy with confidence, negotiate smart, and position yourself long-term equity growth. That does it for today's video. I appreciate you watching. See you on the next video.